When you have too big to fail banks, when you have the BNY Mellons of the world or the JP Morgans of the world, or the State Streets of the world, they custody the Bitcoin, or they buy and they sell and they hold the Bitcoin. You'll have banking acceptance. And what are banks? Banks are just institutions that are engineered to be custodians of financial assets. So of course, the greatest custodians of assets in the world need to custody this asset. So we're right in the middle of that, and I think maybe 2025 you can call it year one of the institutional era of digital capital, that thing which is Bitcoin. If you want to see the people with all the money and the power in the world embrace the asset, they will do it when their vendors support the asset. And that's a rippling thing, right? Because until you have the fair accounting, people can't see how intelligent the idea is.
According to Saylor, January 2024 marks the beginning of a new era for Bitcoin. He believes that the path to institutional adoption is centered on three key factors: regulatory acceptance, accounting frameworks, and banking support. Each of these elements builds a strong foundation that legitimizes Bitcoin and instills confidence in institutions to adopt it. While Bitcoin ETFs have achieved some regulatory approval, full acceptance will depend on more comprehensive financial integrations, such as options trading and in-kind creation and redemption mechanisms for ETFs. Once these practices become standard, Bitcoin will achieve a regulatory status comparable to traditional financial assets. By January 2025, the introduction of fair value accounting rules will enable companies to assess their Bitcoin holdings similarly to stocks. This shift will reduce concerns about volatility in financial reports, allowing institutions to accurately reflect the real-time value of their Bitcoin assets. If you enjoy this content, please like the video, subscribe to the channel, and turn on post notifications for more updates. Thanks, and enjoy the video.
January 2024 was really the beginning of this era. Maybe this is year zero of institutional adoption. When we have regulatory acceptance, bank acceptance, and accounting acceptance of Bitcoin, those three planks, that's year one of adoption. And when do you have that? Well, you kind of got 75% regulatory acceptance since we got these ETFs. Not all, most. When we have IBIT trading on the options market, that's a big step forward. And when you can do in-kind create and redemptions of the ETFs, you've got full regulatory acceptance of the asset. Then January 2025, fair value accounting becomes the norm. And now you've got accounting acceptance. And now you can mark up and mark down the asset just like Apple stock or just like other assets. And then when you have too big to fail banks, when you have the BNY Mellons of the world or the JP Morgans of the world, or the State Streets of the world, they custody the Bitcoin, or they buy and they sell and they hold the Bitcoin. You'll have banking acceptance. And what are banks? Banks are just institutions that are engineered to be custodians of financial assets. So of course, the greatest custodians of assets in the world need to custody this asset. So we're right in the middle of that, and I think maybe 2025 you can call it year one of the institutional era of digital capital, that thing which is Bitcoin. I think the issue is not really with the asset class. I think any conservative or any traditional investor, if you're a high net worth individual, a family office, if you're a successful corporation, if you're an agency, a government, or any political entity, and I introduce new technology, if you want to see the people with all the money and the power in the world embrace the asset, they will do it when their vendors support the asset. And that's a rippling thing, right? Because until you have the fair accounting, people can't see how intelligent the idea is. It's if I call my broker and say, buy $10 million of this, and they say, you sure, boss, click, and it's done, then you start to see adoption. And when the company that adopted it announces that they just made twice as much in their earnings for the quarter as they used to because of it, it's like, well, then buy more of that stock. And when the mayor of Miami or the mayor of New York City or the governor of Texas says to his treasurer, I think we ought to have some Bitcoin, the treasurer says, okay, no problem, I'll let Citigroup or Bank of America or Morgan Stanley know, and they'll do it, click, and it's done. Then you're adopting. But when the governor says to the treasurer, buy 10 billion, and the treasurer says, there's not a single bank in the US that will sell that to us, it's like, well, I guess we're too early. And it's the same thing with you putting an elevator into your house, or electricity, or how about running water? You know, why didn't people put running water in their house, you know, in 1880? It's because it was like, you had to be rich, and it was expensive, and 1 in 100 people had it, and the guy that's building your house didn't know how to do it. He'd never done it before, you know, and so these things get embraced as everybody in the society gets comfortable with the new technology, and generally it's like a 30-year generational shift, you know. In year one, no one's doing it. You see those pictures of New York City in 1905, no cars. 1915, everybody's got a car. You know, it's like, well, what did it take? You know, it took this exponential set of processes and support for this to happen, and the same is going on with Bitcoin right now. Well, no, MicroStrategy is doing it right now, right? Like we just discussed BTC yield. So MicroStrategy takes the Bitcoin, and then we do something. We actually find a way to take out a loan, reinvest it, and generate a BTC yield. And the price you pay is you take a risk with a security called MSTR, right? So banks do it a different way. I mean, bank will take your asset, you have $1 billion of something, $1 billion of Apple stock, and they may loan it out to someone else, and they may get paid a fee by the one person that wants to borrow it, and they might pass it on to you, and they might not, right? So sometimes they do. They'll definitely do it with your treasuries or with your cash. Sometimes they don't. Depends on who you are. I think that banking is just the next logical step. But in terms of how am I going to get a yield on Bitcoin, I'm going to get a yield when 1,000 companies in the Russell 2000 buy Bitcoin, operate their existing business, sweep their cash flows into Bitcoin, and do stuff with it. They develop business on top of it, right? That's a way to get a yield. And I'll get a yield if too big to fail banks that are well capitalized, they start to accept Bitcoin as collateral. And probably, you don't get a huge yield, by the way. If you think about the metaphor, it's like when you own Apple stock, it's, you know, oftentimes you don't get a yield by loaning your Apple stock. But big corporations do. The big investors actually get paid a small interest rate when they loan their stock to people that want to short sell the stock. And so there is a market there for that. But more likely, the next stage is a big bank accepts your Bitcoin collateral alongside your Apple and your Microsoft stock and your treasury bills as collateral. And they give you some advance ratio against it, and then you can borrow at SOFR plus some spread against it because it's, you know, no worse collateral than Apple stock as a block is. And so you'll start to see the formation of credit markets around Bitcoin.
Another important point Saylor makes is that Bitcoin's institutional adoption will help reduce its perceived risk and volatility. When large, regulated entities hold Bitcoin, the chances of government intervention decrease. This shift in institutional ownership will change the narrative around Bitcoin from being viewed as a speculative asset to becoming a dependable store of value. Saylor argues that the battle for the future of money will revolve around capital, and institutional investors, those with the greatest financial power, will shape the outcome. Since traditional finance still controls the majority of global capital, Bitcoin's future will depend on how swiftly these institutions incorporate it into their portfolios.
I think that when the Bitcoin is held by a bunch of crypto anarchists who aren't regulated entities, who don't acknowledge government or don't acknowledge taxes or don't acknowledge reporting requirements, that increases the risk of seizure. if a country in desperation, if China knew that there were underground crypto traders with billions of dollars of Bitcoin in their midst that didn't pay taxes, the Chinese would probably try to shut that down, and that's what they do. So normally the risk is greater when they're unregulated private entities that are perceived to be holding the asset. When you have regulated public entities like BlackRock and Fidelity and JP Morgan and State Street Bank holding the asset, well, all the lawmakers and all the law enforcement arms, they're invested in those entities, right? So there's no way that all the senators and all the congressmen are going to seize the assets from Fidelity and BlackRock or Vanguard, because that's where all their retirement money is invested. So the asset moving from private to public hands and moving into regulated entities, it does a bunch of things. It decreases the volatility. It decreases the risk of loss. It decreases like, who do you trust more as a custodian, FTX or Fidelity, right? Or Vanguard or State Street, right? And if you walk down the street and you said, would you put all your family's money in an offshore entity without a headquarters run by 5 dudes without an auditor? Or would you put it with a bank that's too big to fail in the US? Right? Like, at the end of the day, you have an OG crypto community that's very hardcore about it, but if you look at where all the money is, 99.9% of the money is actually in the traditional economy. And in the war for the future of money, the war is going to be won with money. Right? I mean, right? At the end of the day, Bitcoin is capital. Who's going to actually decide who's the winner or the loser? The people with the capital. And so where's the capital? It's at Vanguard, Fidelity, State Street, JP Morgan, Morgan Stanley. They're all regulated entities of sorts. So when Bitcoin is held by those entities, it becomes regular and normal. And, people would no more think about seizing that than they think about seizing a building in the middle of Manhattan, or seizing, the S&P Spider assets. Why would you do that? That's just the capital that you built the country on.
Saylor draws a powerful analogy between Bitcoin.
Today I am back with another great new video. In this video, Michael Saylor has discussed about Bitcoin. He says Bitcoin is best and better than other traditional assets like real estate, bonds, something else. If you like crypto related content, then you can subscribe my channel, because I daily upload this type of Bitcoin related content. So guys, please subscribe my channel and keep watching my channel, because I upload daily this type of video in my channel. Now I am playing a game which name is VGMI. If you like this type of gaming video also, then also you can subscribe my channel. You will be never disappointed. So, without wasting time, keep watching my channel and my videos. In this match, my old teammates are dead. I searching for gun, but I don't get any auto gun. So guys, keep watching. Actually, if you like Bitcoin related content or gaming related content, then you can subscribe my channel, because I upload daily this type of video. Guys, basically I upload crypto related content for guys who are crypto investors. They can subscribe my channel and watch my video. Now I'm end the video for today. I'll be back with another video next. Bye bye for now.